Okay, hello traders and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, March 7th. We just got the release of U.S. trade balance figures, came in right in line with expectations, negative 48.5 billion. Not expect to be a market mover, but I just wanted to bring that to your attention. Good morning to everyone here in the room. Dee, Gary, Graham, Pete, Sarubs. Yeah, great to be with you guys this morning. Carlos, just so you pop in there, how are you? So, we have a good deal of things to go over today. I want to go over, obviously, the DXY hasn't changed. We'll just take a look at it. I went crazy on the euro pairs yesterday, so we'll go over euro yen, euro key, euro Oz. We'll get an update on euro dollar, which continues to slug lower as we expected coming into those lower parallels. So I am looking for a reaction down here at some point. We'll touch base on pound, continues to melt lower. That reversal on the start of the week off of key support, it's not materializing, so I haven't gotten anything on that. Dollar yen, really clean in that formation, and dollar CAD, no change. We'll take a look at that as well. Also on the list from the commodity block is really gold is the only thing I'm looking at. That ML structure we added in the webinar yesterday, if you guys attended, continues to hold pretty well. So for those of you trading that, the near-term structure looks okay still. Okay, and that's what's on my list. As always, Dee, good morning to you. Yeah, same to you. Aussie Sarub, yes, how can I forget? We did get the RBA interest rate decision. Price action wasn't impressive, but I'll tell you, the interest rate decision was. And the commentary that came out showed a little bit more of a willingness for the committee to start looking forward to interest rate hikes. Remember, this is the 6th consecutive time they've held interest rates at 1.5%. But they talked about gains in industrial production and trade flows and how the dynamic certainly opens the door for expectations that we're going to see the Fed interest rate hike. By the way, just to touch base real quick, here's what Fed fund futures are looking at now, 98% up from 94 yesterday, probability of a hike next week. So certainly markets are fully priced, but the RBA was pretty upbeat, you know what I mean? And the commentary in my mind solidified that they think that this recovery is lasting, basically. This is the real deal that we're seeing. So it's really interesting. So we'll take a look at Aussie dollar too. I'll add it to the list here. All right, let's jump right in. As always, guys, feel free to stop me with any questions or trade setups you want to review. First things first, here's dollar index. So, no change here. If you go back to the intraday update from Sunday, here's what the DXY looked like on the daily chart. And really, it's the same focus, guys. We're in this little pocket here. So, I mean, if you want to intraday trade that, scalp that, that's fine. But we're waiting for the either break above 102 or my preferred scenario, near-term correction to the downside. Longer term, you'd be looking for a 100-day moving average, key support down at that 618, which is right around 100 spot 40. Long way from where we are now, for my terms in the intraday or intra-week, that is. But with that said, keep your eye on that. Keep your eye on that range. It does look like it's going to just coil up and break into something. Here's what it looked like on the 240-minute start off the week. This is before the weekly open. We came right into that pocket of support and bounced right off. We're still right here, okay? Again, look at what the 60-minute looked like before we opened up the week. Here's what it looks like right now. Okay, so we basically just came right into the 618 retracement, sat here, spiked right higher, and now we're at resistance, probing through this region. Don't really want to play the upside. The intraday chart doesn't really highlight that key resistance that we're looking at here as much. So just keep that in view. It's really the 102 level. That's the barrier break that would give us basically a breakout play here in the dollar index. My preferred scenario is that we still look for this thing to give us a little bit more of a pullback. Keep in mind, still big event risk week. Got the ECB on tap tomorrow. You have ADP on tap on Thursday. Obviously, non-farm payrolls on Friday will be the biggest market mover. And certainly the ECB with the euro very heavily weighted the DXY, okay? So the propensity for this thing to still show some big moves this week is there, and look for a coil break of this pocket region in the dollar index. Still wouldn't be surprised if we get some more topside break here, another run towards 102 before it turns over. Any questions on the index? That's number one. I'm just going to fly through that one. There's not really much change or to comment more on from yesterday. Euro yen from last night. So the euro crosses just sparked my interest. I mean, I really just started looking at euro. We've been following that since the start of the week on the Sunday update. Euro yen started up the week also right at resistance, 121.14, 121.11 into 121.16. You got a confluence region here of a 618 extension, a 50% retracement. This extension is from the decline off the high. This retracement is also a range of that entire move, and it both coincided right on this upper median line parallel. Again, this is the daily chart. This is the 60-minute. And you can see the reaction that we got early in the week. So look, you know, just to show you where we were yesterday again. Daily chart, key resistance, 121.11, 618 extension, again, that confluence region. Here's what it looked like on the 4-hour. And again, you had the trigger break, it moved lower. I still think it can drop into a low 120, maybe 119 even. Bullish invalidation is 119.35. I know it's ways away from where we are now. Ideal scenario, you get the pullback first into 120, maybe a rebound there. Then 119 is really the sweet spot for me. If you look over to the right on the daily chart, you have that 119.70 region representing the 50% retracement of this near-term stretch to the upside. It's that close for that low day that we made on February 8th, and it's the 100-day moving average, all stacked up right here. So for me, you know, if we get that stab into 119.70, it would be certainly a welcomed development from my end. But looking at this objectively, you know, 121.16, 121.11, that region's still the breakout region. If we break higher, look for this to run. Ultimately, I do like this higher, and I said that last night. It's just that near term, I'd be still remiss while we're in this formation to really try to fight this resistance until we get a little bit more of a pullback to the downside. And with where euro is trading, which we'll go over in a moment, coming off a nice resistance that we highlighted early in the week, it kind of makes sense to see this thing give us a little bit more of a sap to the downside, I think. But look, know your levels. If the weekly open gives out, look for a run on that ML. A break above this, no interest in playing this region. Maybe exhaustion here. But that's the only way I'd play this. If we get into the weekly open, maybe try to take a short against those swing highs. Again, if we get past 121, 11, 16, you do not want to fight this trade. That is, guys, the objective weekly opening range high. So even if I was just sitting on the sidelines doing nothing with euro yen, and you made a roundabout like this, the break of the weekly Sunday high would shift that near-term focus back to the upside. Not my preferred scenario. Preferred scenario, break lower, look to buy it. And again, with all these euro pairs, guys, by the way, that we're going over today, just as a caveat, I do want to just remind you again, you know, the ECB is on tap. There is no change expected. But as I said yesterday, there's a whole vast array. I was just skimming. I don't like to get too much into the fundamental reports. We have access to it way more than anyone should ever need to actually look through. But when you just skim through them, they're all over. You know, some guys are saying the ECB is going to come out super dovish because now they're concerned about the interest rate hike and the impact that's going to have on, you know, the economy and energy prices and all this. Some people are saying that, you know, this is encouragement. They're seeing the Fed start to move. This is going to allow them to normalize more. They're all over. The expected policy changes, no, but certainly it's always about the commentary. So with all the euro pairs that we're going to go over today, just keep that in mind. If you're going to be intraday trading them, or you'll have a position open through the announcement, don't shake out, but certainly make sure that we're adjusting our position size, our stops are in place, and any new additional positions you take on from now should really be a lower leverage type of play, just with that event risk on tap. So quick note there. Euro key was next. Number 2, number 3, euro key. So back by popular demand, as I noted, it seems like every webinar someone's asking about euro key, and I'm kind of trying to avoid it because I wasn't really a big fan. But then we started looking at it, and it looks all right. I'm not really too crazy about what the longer term picture looks. Here's what euro key looks like We were following it last month. If you click on that, it seems like I should just trade off daily charts or longer term because all these trades pan out pretty well when you go back and look. But the break to the upside that we were looking for, we did get. I took out all the targets that we noted last month. But what I was saying last night is I was really, you can't really try to just chase these moves that are breakout above these key resistance. I am still looking for exhaustion, as I noted last night. I think that risk still exists below 152, essentially 151.95 here. Not on the basis of 88.6, but just on the basis of where we are in slope. So ultimately, I love this pair higher. In fact, of the Euro crosses, this is one of my favorites. I think to see a little bit more sustained strength overall, broadly speaking, longer term. But near term, I do think you're showing a little bit more of a exhaustion play here momentarily. You're looking at some divergence in momentum that was already being marked yesterday. Of course, this is divergence above 70, so it's not something that you want to stress per se. These tend to be weak divergent signals, but divergence nonetheless. Price action at a higher high, the oscillator at a lower high. And I think you can play the pullback on a really light scalp to the downside. Ultimately, we do want to look to buy this constructive above 150. Here's what it looks like now. The daily chart first. Again, just to highlight the broader scope of where we've been and why this has not been a trade that's been so comfortable for me. Last month when we talked about Euro Key, the major focus was the fact that this thing had just made an objective monthly opening range. Okay, that monthly opening range happened in just the first 7 days of February trade. We never broke it. We sat the entire month in that range. Last week, we broke to the upside. That gives you a near-term upside bias. That stretch is coming into initial resistance. So the pullback, even if it gets as deep as 150, 149.80s here, you got the 100-day moving average, former slope resistance, support, resistance, 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 converges right down here, still wouldn't even be surprised. I'd still call this a constructive trade. So within the broader scope of things, you kind of feel the idea of where we're coming off of. Also noting that we made some nice divergence into these lows. All three of these reference points, lower low, lower low, lower low. Again, we're only looking at the closes. And this is a series of higher lows. Very slight, but a series of higher lows. And again, these subtle divergences, when they do give way, tend to give a nice turn. So we got that. We got the trigger break also last month while we were in that range. Even if you take this trigger to the last most pertinent highs, that was probably the one that would have actually activated a little bit more of a long bias while I was away. But you get the picture. Looks constructive. The one thing that I want to hammer into everyone's head, the one level you can't live without if you're talking about Euro Key, is right there. Why? Well, you have the yearly opening range high. Oops. We'll make it nice and obnoxious. Okay. That's your 2017 yearly opening range high, your 200-day moving average, and a nice median line here extending off the lows from February of last year. Decent pivot, decent pivot, decent pivot, resistance, resistance, converges right on that same region. So that's why I don't want to get anyone getting all excited about the long. I do think you're going to get into 52.80 at some point, but I don't want to initiate a new long position from anything northbound at 51 yet. I would need at least a 50 pull to try to play this one. Remember, again, Euro Key, nicer range ATR. It's not necessarily the tight ranges that you see in the dollar crosses. So it's becoming a lot more interesting, to say the least, okay? And I do think you'll get some nice plays here. 51.80, 52.16, 52.80 key topside targets. I would like to stay, look for some sort of pullback near 50, stay constructive on Euro Key. Again, here's what it looks like on the intraday. The intraday, the clean part, is that the ascent off the lows, here's the hourly, is following this ML like clockwork. Okay, I know we didn't actually scrape the top side yet, which is why I still have that marker there at 51.95. But you can see, really nice pivot. Break, resistance, break, instant support on the 50 line, hesitation around the median line, turning, raised ceiling maybe, which means you look for that drop. Again, Weekly opening range low, your objective weekly opening range low, comes in at 150.50, right alongside that ML. Possible area of interest, 50 is the bullish invalidation. Questions on EuroKey. I know that was a mouthful, but I've been studying this one. I spent a couple of hours on it last night, so it's fresh in my head still. Any questions on EuroKey? As far as New Zealand event risk is concerned, you're clear for the week, so really look for the euro to be driving here. Okay, that is number 3. Number 4 is Euro Aussie. I remember we were talking about Euro Aussie before I left and my disdain for it. I still kind of feel like that, but I think there's a little bit more clarity. So I wanted to make sure I highlighted this for you guys yesterday. Here's what the daily chart looks like. There's really nothing to look at on the daily chart. I mean, I kind of just threw it up there so you have a reference idea of what we're looking at, broadly speaking. But you know, that break that we made last month just shook me out. I didn't know what to do. I didn't have any targets till 35.07. I still don't, to be honest with you. I really don't have anything that caught the low here. So I'd be remiss to try to say that this is some sort of major key reversal. Could be. I don't know. What I do know is this. There's been some clear-cut, strong divergence into those lows with that last low that we made into last month. Higher low in the oscillator, and it was followed by a trigger break to the upside, and here's the run. So near term, this slope looks good. Price action has been giving us some nice turns. The momentum signature has cleared 50, okay, for the first time this year to the upside. So there are things that are starting to look like, okay, you might be looking at this thing starting to struggle here. I wish I had a more concrete technical level that would give us a little bit more evidence that this is something, you know, other than just a turnaround. I'd like to see these turns happen at some sort of significant technical level, but in any event, we've got to trust price action. You're looking for the pullback at this point to see if it settles still within the confines of this formation. Here's what the intraday looks like. Here's what it looked like yesterday. Okay, here's a 4-hour. You could see that formation pretty damn clean, right? And where we opened up the week, just shy of the upper median line parallel, you're looking to play that pullback towards. Initially, our targets were 139 and 138.66 into that ML. So 138, well, actually, it's right there now. The 138.39 got taken out, or 130, excuse me, guys, 139.30, 139.24, that 236, both of those, just making up numbers, sorry about that, got taken out. And then here is that orange marker. We just came right into it and we saw a rebound. I still think you can probe. This trade remains constructive into the monthly open, which is down at 38.12, 38.21, this pocket. But I'm still more inclined to treat this as a correction. So I'm light on the way down. I would be looking for to close out any shorts sub 38.66 here, and I'd be looking actually for long entries into this region. As long as we stay above this basic trendline support, which converges on the 50 line, on the 50% retracement and the monthly open, I kind of want to stay constructive. Whoops. Right here. So that's kind of the game plan for me here on Euro Aus, which does leave a little bit more room for a Euro rally near term. In light of the commentary that we got from the RBA, I wouldn't be surprised if U.S. markets came online. We did start to give us a little bit of a ramp here. But that's sort of the idea. And with the Euro weakness that we talked about, I think that's the idea here for Euro Aus. Isn't that weird? We haven't been looking at Euro Aus for so long. Here it is. Finally, some technical clarity. Any questions on that? Still watch for support into the ML right now, into that 38.66. This is still support. This is what you'd need to break. Again, if we get down here, I'd be looking for a washout. The rest of my shorts, the couple that I have left, the limit is just at 38.66. So if we get it, I'm out. You know, stops our break even already. Okay. Next up on tap, euro dollar. Just a quick update on that. The Sunday update levels are still pretty clean. By the way, again, feel free. I don't think I see a couple new names here, guys. If the there's a camera button in the top right-hand corner of your GoToWebinar screen. If you want to take a picture of any of the charts that you see presented that we're discussing, feel free to do that if you need to reference them later in the day. But euro dollar from earlier in the week looks like this. There's really nothing to change on that. You're still within the confines of the structure. Looks damn good to me in my mind, so I'm not really going to complain. Here's what the euro looked like last night. Okay, we were following it since earlier in the week, but basically coming just within that secondary target at 105.50 in overnight trade. The overnight low was 105.58. So look, I'm looking for some support now as we get down into this region. It's a 618 retracement of the advance. It's the 50 line of that former descending formation that we were in. I know this chart might look a little messy to you guys at home. Let me see if I can stretch it out. By the way, all the charts on an SB Trade Desk are super maximized, guys. So if you have a huge monitor at home, the bigger you make it, the bigger the charts the website's made. So we use some pretty big monitors, so it seems a little scrunched up. You have the 50 line of the descending channel. You have the 618 retracement of the advance. And just, depending on where we are in time, obviously the lower parallel. But a nice pocket region there. I'm looking for some reaction here in euro. Okay, ultimately, don't necessarily, I'm looking higher. Ultimately don't get too comfortable on the downside. This is just the pullback that we're looking for. We started off the week saying what sub 106.22, watch your back. And here's the pullback. So we don't want to get too excited, but we are looking a little bit lower, I think. See if I can clip an entry on this. I'm flat on euro here, by the way. Have been. Okay. That's number 5. An update for Sunday. We're going to go over the Sunday pieces. We went over the British pound, dollar yen, dollar CAD. Obviously, again, we'll go over the Aussie. We still have gold to cover. First things first, British pound. Again, here's Euro's update from Sunday. 105.65 is where we're trading right now. Okay, so obviously because of where we are in time, we've already strayed below this median line. We're around here. So look for that little drop, I think a little bit lower towards the lower parallels if we're going to get that clip. British pound. So here's where we were to start the week. Look, I wanted this thing to hold 122 like no one's business. It doesn't look like we're going to get it. I'm not going to fight it. It could be a classic sterling break of support and turnaround, just like the throw over when we break resistance and pull back. This thing is notorious for doing this kind of price action. So I don't want to make any assumptions. And we haven't closed a daily candle yet. But a couple things to take note of. In momentum, this would be the lowest momentum signature that we've gotten since the lows. It's almost a floor in momentum here. So that also gives me little hesitation that the break might not be legit. Secondly, looking at this even from a near term, you have this slope here in red, which, if this was going to be a break, I wanted it to be something more substantiated. I always say this to you guys. When you see a big confluence support or resistance, you shouldn't get this, sit there and just stick for a while. Those are classic fake outs. If this is legit support and resistance, which you have 2 touches on resistance, it's a parallel off support here. You got a touch and a perfect play. You'd expect it to either be a stronger rebound or the break to give you kind of even if it's going to be a slow drip, but a directional move. This has me kind of scratching my head. So look, I'm not going to tell you guys to start fading this thing because I think that it's fake. I'm not going to certainly jump in at the lows on a pretentious break like this. So sterling's a no play right now. You gotta kind of have to sit on the sidelines. Hey Gary, you didn't miss the abomination, my man. Dollar yen's coming up next. So you kind of just have to sit on the sidelines. So look, above 122, a northbound close of 122, I'm still going to favor it that it could be a false break and that it could rebound. On the intraday charts, that channel that we drew is still the play. And as you know, as we noted on the Sunday update, you know, a break of this near-term channel would be a start. So until you kind of get that break, you know, sit tight. I think that's going to be the definitive move. Again, the opening range highs at this point is now not even to like 123, so that kind of makes that a no fun type of play to try to play the opening range for the week. But that's kind of where I'm at with sterling. And if you hear a lot of hesitation in my voice, it's just because I'm kind of hesitant. So I don't really want to mess with this thing just yet. Any questions on sterling? Again, data-wise, we don't have anything until industrial production and manufacturing production figures on the 10th. So we still got a couple of days before that on Friday. There's a 4-hour, by the way. So you see why this is so important is because this structure right here, this parallel, if you take it to the highs, literally caught that high perfectly. So the structure in my mind, you know, has clear merits. And if this is a break, you know, you're looking down here, guys, for sterling. So the implications are big. The implications are big. Look for 122.60 to give out on the upside as an initial breakout of the channel of that 618 retracement. The weekly opening range break opens up a much more substantiated rebound if we get it. All right, and that is British pound. Cable. See if this is a fake out or the real deal. Next up on tap, Gary, right for you, brother. Here is the abomination in the flesh. Dollar yen looks like this. Structure-wise on the interim charts, on the intraday charts, looks beautiful. Here's what we look like back on Sunday. We were looking at this ascending median line formation, saying, look, obviously it looks constructive. You closed out on Friday right off, perfect kisses off of that median line with a really strong outside reversal bar to close out the week on this 4-hour chart. So basically, you're opening up the week still looking for a little bit more of a drawdown. We actually did open and pull right back into the 50 line. Look, I like it higher, but near term, Gary, I do still think you get a move lower. I was talking to Jamie about this yesterday. 113.22 would be the gift. I was looking at that yesterday. It's kind of getting out of focus now as you get through in time, just because of the slope here, which has been broken, guys, but it was a nice resistance. And then when we broke through again, it accelerated. So I'm still going to leave that slope there. Converges on the 50 line. Broader bullish invalidation is still 112.85 into the monthly open, which comes in at like 112.75 or so. It's right here. What else can I say about dollar yen? So here's the 60-minute looks like. So on whole, it's made a weekly opening range. You're actually testing the weekly opening ranges right now. If it breaks to the upside, let's see what's going on here. $114.30. Yeah, and you already got like a little bit of a... Remember, when you're taking these triggers and momentum, guys, you want to take it off the high in price, not the high in the oscillator. So that would put this as the operative trigger to the upside, which looks like it might be giving out here. Yeah, I think you could probably drift a little higher here, Gary, before it turns over. I mean, I'm still going to stick to my guns. I want to see a 113.20 clip or even 113 into 112.80. This is the spot in my mind, just because of the slope has been phenomenal. Look at that pivot, 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 support, support, resistance, resistance. So it looks pretty good. But near term, the momentum's starting to look like you could see a little bit more of a pop towards 114.30 on the intraday. At the end of the day, the topside barrier you need to clear for this thing to get the next leg, let's call it, would be 115.10. Not only because the 50% retracement, but because of the median line also converges on there, and you've already gotten really nice pivots off of the slope. So I'd be following this exceptionally close here on dollar yen. That's your key resistance to break out for the next sort of big leg, targeting 116 essentially, 117, constructive above 112.85. Gary, does that help? Does that make sense? That is dollar yen. All right, that's number 7. Any other questions on dollar yen? Let me know. Dollar Kent, Gary says it does, but then again, it's the abomination. I feel you, brother. I feel you 100%. It is what it is. But to be quite frank with you, I don't think it's that, I don't want to say the word dirty. I don't think it's that messy here. If you don't have a position on right now, sit tight. I would still look for the drop. If you get a clip of 113.20, 112, 113, I'd be looking for entry. If it breaks northbound of 114.30, you can try to get cute and buy dips. But I do think if you clear 114.30, you're on your way to 115.10, no problem. You know, if we react to this median line, then this is a simple. You want to look at the median range here as sort of your target points to the upside. But I do still think this risks a little bit more of a short play in the near term. Dollar CAD is up next, number 8. Remember, I'm excited for big things in dollar CAD this Friday because you got the double whammy jobs report with Canadian employment numbers and U.S. non-farm payrolls. Here's what dollar CAD looks like on the daily chart. We've been following this one since Sunday as well. Cool. Many thanks, Mike. Anytime, Gary. Good seeing you in the room as always, brother. Here's what dollar CAD looks like, or here's what it looked like to open up. This was before the open on Sunday. And we shorted the risk to the we cited the risk to the short side, sub 134.50, or the risk to the upside rather, that you should be looking for a possible downside move or a pullback heading into this region. I still think that's the case. You haven't really done anything this week yet. You just saw a nice range hold just below here. Here's what the intraday chart looks like. Really tight weekly opening range. The only reason I bring this up is because the weekly opening range is so tight. So if it breaks and it ruptures to the upside, 113.50, 134.70, or 134.50, 134.70, I'm talking too fast, are levels of which you would start to look for possible near-term exhaustion. Here's what the daily chart looks like. I'm not particularly fond of it, but 134.50, as I just cited, just above that. I mean, if you choke this up into the 786, it actually comes in right in line. I'll show you what that looks like. Right here, basically. So, which is why in the intraday charts, I just left this whole range, 34.50 into 34.75. That gives you room to the upper parallel of the descending slope. I don't have this ascending one here just because I didn't want to make it too complicated, but here's what it would look like. You can see the median line, really nice touches. That converges there too. So there's a lot to look at with dollar CAD. High expectations. I really think this is going to be a nice reaction point if we get up there. On the downside, if we do start to break lower, which is what the plan was, to play their week, ideally, as I said on Sunday, I wanted to see a spike into this region, this sell-off here to buy back towards the median line here. If we don't get the spike and it kind of just breaks down, the first thing you'll want to do once we do get a break of the weekly opening range, obviously, is just tack on a quick retracement here to see what the levels are. But you're essentially looking for, a drop towards 33.20, the monthly open. And I want to stay constructive, broadly speaking, in the trade while above this region. That's kind of the breakdown zone. That gives out, and you're looking down all the way at 32. But big things for dollar CAD. And it seems, you know, we'll see what happens with crude prices too. That chart's getting real messy, even on the intraday. So just know where to pick and choose your battles. And I think this one's going to be one we'll be tracking exceptionally close, especially heading into Friday. Any questions on dollar CAD? That was number 8. All right, we're making good time today. I'm flying through these. All right, Aussie dollars up next. On the back of the RBA interest rate decision, here's what we look like on Oz. So what can we say? Look a little higher. Look a little higher. That overnight steam out might have been it. I still like the short side. Nothing's changed. Just the relative performance that we got into this day, this single day performance here, that's not even it. I really cleaned up this chart a lot. If you go back, I guess we could go back into the archives here just to show you why that break was actually important. All right, I don't want to take too much of your time, but I have not been too fond of the Aussie. You can tell by looking at the reports here. 124. Here's the daily chart I wanted to show you. So this was what we were looking at heading into basically the end of January trade. And while this formation gave out, the fibs gave out, the failure happened right ahead of that key region that we were looking at months ago. When was this? This is 120. This is the end of January trade, literally over a month ago. And the breakdown that you're seeing here begs, if you just get rid of this, a break of resistance, which was pretty decent formation, check of support. That still takes you much lower. You got the 100-day moving average, 200-day moving average, and a basic 38.2 here. So that gives you still 75. This would be a basic 50 of the entire yearly range, and that converges on the lower parallel. Now, that would take a great deal of dollar strength, which is kind of my problem with getting too aggressive on this at this point. But that's kind of where my mindset is with Aussie dollar. Now, in overnight trade, obviously you got that interest rate decision where the RBA was much more hawkish or way less dovish, whatever you want to call it, than expected. And yeah, that's going to give it some fuel. But I want to keep it, my whole point in showing this, guys, is I want to keep it below the monthly open. I want to keep it below the median line for me to still favor that downside. So with that in mind, going back sort of to where we are now on the intraday, what does that mean for me, Mike? What do I do right now? Right now, you want to be looking for short triggers well below the median line. That's it. This is going to be our near-term bearish invalidation. A break above the monthly open, in my humble opinion, you got to get bullish again. I mean, if we clear like 76, 76, 65, 76, 55, I'd actually be looking for this thing to just rip. But that's just my humble opinion. I still think you look lower. At this point, again, a target would be wherever this median line ends up. Just look at the overnight lows, basically. This is still key support. Last week's low converges on the lower parallel for the current operative structure. That gives you downside targets at like 75.80 and 75.40. All right. Sorry I don't have so much conviction on this one for the Aussie. And it's not so much that the data changed things. It's just that price action is you know, for intraday, that's kind of tough back and forth. It can be really great if you guys are sitting in front of your desk and you're just timing the markets and that's all you're doing, but a kind of intraday or multi-day position, you're going to get chopped up pretty hard on this. So just keep that in mind. Any questions on Aussie? Going once. Going twice. Sold. At number 9 is Aussie dollar. Here is gold coming up next. Gold, the deal with that is the near-term structure. It looks beautiful. Look at this. It's magnificent. It's actually just broke right now. So right before the webinar, I was looking at this median line holding as really, really nice support. As we were talking about this yesterday, I want to bring down the bearish invalidation level at this point to the weekly open. The weekly open converges very, very nicely on the median line that we added yesterday, and certainly near term. As long as you stay below that, I think you look lower. That gives you a rate of 1234. Downside key support near term at this point is 1210. That is defined by a basic 38.2 retracement from the advance off the lows that we made from December of last year. Obviously, that was the yearly low. And the basic lower median line parallel for this formation. And again, this formation is just ridiculous. It's super clean, guys. 50 line, support, support, break, median line, support, former 50 line, now resistance. Median line break. Where do you drop? Support at the 50 line. Where's resistance? Right at the median line. This is, when you see something like this, you take advantage of it. Period. End of conversation, exclamation point. So right now, I'm still looking for a drop into 1210. I think that's completely reasonable. And with what dollar is doing, still a little bit more upside. You could see that push give us that final thrust near that position in gold. Any questions on this? Okay, and that is gold number 10. And that puts me through my list of things. Guys, if you have questions or trade setups you want to review, please feel free to throw them on the message board. Please include MXN in the webinar, please. Vladimir, great to see you in the room. I don't really track peso, man. I'll take a look at it for you. I'm always down for a challenge, so anytime anyone's got something to throw out at me, feel free. So let's take a look and see where we are. I don't really track this one very closely, and I can see why. This is kind of more Jamie's baby than it is mine. Okay, so here's the ML formation I was working with. I think someone at Daily FX a couple weeks ago was asking me about this, and that's when I drew it. This ML formation, you know, you're at a very sticky spot, both from a Fibonacci standpoint and a slope standpoint. If you take just the lower median line parallel, which caught the lows really, really well here in early February, we closed below it back here. This is a daily chart, by the way, Vlad. We closed below it. The reversal came back and tested that same 618 retracement as resistance. So this is your focus range right now. The lower parallel for this slope and that 1964 region of resistance. Momentum looks tired. This is clear-cut divergence. So price action's making a new low. The oscillator's making a higher low. That's not a reason, excuse me, to get bullish, but certainly it's a reason to wane your expectations for further moves lower from here. So just looking at this for the first time in a while on a daily chart, I would say this looks precarious here at best, that you could see a near-term pull higher. Broader trade still remains bearish. I would say you're clearly bearish still below that. But near term, this is messy here. This is a big region. Let's see what this looks like on the intraday charts. That would be a downside break target. Let me see what this looks like on the intraday charts for you. Well, too steep. Yeah, you don't even have like a clear-cut wave count that you can take an extension off of on this one. Okay, but here's another example of like building divergence. So even on this 240-minute chart, you can see a series of higher lows in the momentum signature and a series of lower lows. Again, that's just giving you watch your back. Yeah, I would be looking for some sort of near-term recovery here, but like I said, I think the broader trade, Vlad still looks bearish. I don't think there's anything here to necessarily get super bullish at. Immediate risk, in my humble opinion, is for a rebound higher on a spike, one more low. After you make a drop like this, it's very rare that you just make a drop like this, turn and just go right back up, especially if it's on a shorter time frame. If you take this look at this, that was like on an hourly drop. You just did all that. So yeah, I'd be looking for this thing to teeter lower. Maybe, you know, maybe the 786 might be too deep of a cut. Let's go back and see if there's anything. Maybe take a parallel off that low. Would that catch it? You know what I mean? Something like that. Maybe gives you another spike low near like 1937.50. And that would give you one last reference point in momentum to give you the break. Maybe something like that would be a play I'd be interested in, since this slope has been so clean. But you get the picture, right? I would be very cautious about trying to chase this any lower from here. Rally towards 20 or so, back towards that 50 line. I'd be looking back for re-entry on the short side. Vlad, does that help? Does that make sense? And again, I'm just looking at this for the first time in a while. I'm not really a peso trader. Spreads are too big for an intraday guy like me, and it's just too much of a hassle. Really helps on peso. Thank you. You're more than welcome, man. XAG silver looks like this. I am beside myself at how clean this formation has been. Guys, we drew this in December, and it has continued to be super fruitful. I'm just like, I should have dropped everything I had and just done it all with silver, right? It's insane. You know, we broke out of this in early January. That trend line, we came back, tested its support. It was the 50 line. Once we cleared that, the upper 50 line caught for a while. Once we cleared that, we sat on that as support. The upper median line parallel was a perfect confluence with a 100% extension, a 50% retracement. That caught the highs. The pullback sat at the median line. We talked about it yesterday in the webinar. There's the break, and here's the drop that we were looking for near 1730, 1738. So look, it's just super clean. Follow the levels. Don't mind me. Don't mind what anyone says. Just look at this chart and go with it. I'm looking for a drop near here. I do think this is a big region near term. So don't get too excited if you haven't done anything with this yet, and don't chase. But heading into 1730, 1738, I'd start to look for some settling near term. Okay. I don't want to say 17 is key support here, Vlad, but just work with the parallel. Work with the slope, because that's been the cleanest. I think even more so than the fib levels here per se. Does that make sense? So levels to reinitiate along. Look, it's obviously here in correction, Sarub. So I wouldn't necessarily tell you to be looking for longs just yet until you get into that region that we just talked about. 1738, 1730. This here, let me take you to the daily chart. This is big. Okay. Here's the slopes that we've been working with off the highs from last year. So that's this confluence region right down here, 1730. You see that? It's not only, it's ridiculous, guys. The level there is also the low day close from October. So you have the low day close, which was a nice pivot, converges on all of those former resistance slopes and the 50 line that caught that low. So here. So look, near term, I know what you're trying to do, Sarub. If you're trying to scalp this near term, that's fine. But even from a near-term standpoint, this is the monthly open, which could be a nice support bounce. I'd still want to play it into this region because you're fighting it down a downtrend. You know, Sarub, I would say if you were looking to sell this, or if we had a little bit more to go on the downside and we were coming up near overnight high, great. That's an intraday position. Even if you're on the bottom end of the range, you could play because you're playing in the direction of the weekly range. But when you're trying to catch a falling knife like this, or you're trying to call a low, you're better off even trying to attempt that on a small level at more of a critical technical juncture than just trying to catch it. So I'm not trying to just play both sides. I'm telling you right now, you're at the monthly open. Yes, you could see a bounce from here. But from a trading standpoint, you know, I wouldn't really be interested until if we get dropped near here more so to try to get a long position. If you get back above the median line, you're probably on a good route back towards the weekly open, back towards the May highs. But near term, that's sort of what I'm thinking here. This thing has just been so clean. I don't think there's any reason to doubt it. Make sense? Longs, hey, you're more than welcome. Longs for spike into 18 would make sense. Yeah, if that's kind of where, look, I would look at the weekly open just ahead of that. I'd be remiss if I didn't just point that out to you. Okay, you see these dots right here? That's the weekly open. So that puts you basically at 17.95. I hate to see you miss it over 5 cents. Yeah, but that would be kind of the play I'd be looking for, sure, on a spike. Again, keeping in mind, Vlad and Saru, both of you got to get through the median line, man. We've had too many plays off this to ignore it. So if it spikes higher, you know, that's still a region you got to get through. But yeah, I'd be looking right at the weekly open at that point. Hey, you're more than welcome. Really need your helpful view on Natty. Yeah, here's what Nat Gas looks like. I haven't checked that out lately. Actually, since I got back, let me see what it looks like. I see there's not much chart adjustment that needs to be made. Looks like that parallel caught it pretty good. Outside day reversal off resistance shifts the focus lower on a nice break back below 70 here in momentum. That was a perfect trigger. What day was that? No, this is not even a daily chart. This is the overnight. I'm sorry. Guys, this is a 240-minute chart. So that was a pretty big reversal that we made just a couple of hours ago in the open of the week. Little bit different of a picture here for Nat Gas, Vlad. So I have an interior parallel, which is right here. I'm just going to dot it out so it's easier to see. This is still derived off the same slope off the highs. So if you take a parallel from that, it actually caught the exact high that you made back here in February, and it also caught the overnight high that we made right now. So here's the pullback. Give me a couple seconds. Let me just play with this. Might be too tight. Okay, bear with me. This is going to get a little messy. I'm just kind of just want to highlight some key things here near term. Hmm. Okay. I kind of feel like I don't want to stress that at this point, but let me get rid of it. It's not helpful, it's noise. One thing I've learned over the years, if your charts start looking like your kid's coloring book, as Jamie likes to call it, uh, less is more in this kind of business. You kind of just want to keep what matters. If it doesn't, it is noise. All right, so this is what I'd be saying. Keep it simple. So one last thing. I'm going to definitely tack on a basic retracement of the advance off the lows, see if we've made any corrective or Fibonacci standpoint. Significant pullback. That's a 38.2. Not bad. All right. Here are the levels I'd be looking at for Natty here, Vlad. It's actually a nice spot. You know, I was just saying earlier when I was looking at it when you first asked, it's actually a nice spot here. So you have, you know, the former range highs from last week. In fact, it is basically the weekly open. It is the weekly open, literally. Here's your first candle for this week. It's your Sunday open. The lower median line parallel for this near-term structure, which I just added on, and a basic 38 to the advance. So actually, this is a good launching point near term. My only deterrent, or my only concern, let's call it, is 285. The basic 236 the retracement, not because just it's 285, but it also converges on a whole boatload of stuff heading into the U.S. trade session. You know, those falling parallels or sliding parallels off the high, okay, and the median line. So this is kind of still your butter zone of resistance that you'd need to get through for the continuation higher. But ultimately, you know, 304 I think is definitely on the cards. Sarub, does that? I'm sorry, is that for Vlad? Vlad, does that help on nat gas? Feel free to take a snapshot of that if need be. But looks, you surprised me, or the trade surprised me. It looks more. It's not as dirty as I thought. You know, if a break below 275 here, I still wouldn't get excited. 267 is the 618 and the monthly open. Not saying I'd play that short into there, but I'm saying if it drops into there still, another area of which you'd start to look for one last gasp of support if it gets it. But let's see if we can't get that break northbound of 285. Again, you'd be looking for that rally towards 304. Vlad says yes. All right. And that takes me right into 9:30. Wow. Time flies when you're having fun, I guess. Guys, thanks for everyone who attended. Again, we'll be back tomorrow, same time, same place for another update. And Jamie obviously is also on tap tomorrow afternoon. Don't forget, at 12 o'clock Eastern. Until then, best of luck trading, and we'll keep you updated on SB Squawk. Cheers, guys.